Double tops and bottoms. The next pattern we will talk about are double tops and double bottoms. Now, hopefully some of you, just by looking at the title or the name of this pattern, should be able to figure out or guess how it works. And if you have an intuition, you're probably correct. So what is a double top and what is a double bottom? Double tops and bottoms operate in a similar way to triple tops and bottoms. The only difference is that they have 2 peaks or troughs instead of 3. Makes sense, right? And empirically, what we see is that they are more common than triple tops and bottoms, which makes sense because you're more likely to see 2 peaks than 3, because every time you see 3 peaks, you've also already seen 2, so one kind of encompasses the other. They are not as common as head and shoulders patterns. Those are the most common, but double tops are probably the next most common after head and shoulders. So let's go through the mechanics of how they work. Again, I've written this in the same way that I wrote about the triple top and bottom. So the parentheses you read separately. So you read this as almost 2 different points, 2 separate lines that are essentially just giving the opposite thing. So for a double top, the price makes 2 successive peaks at around the same level. After the second peak, the breaking of the neckline constitutes a completion of the pattern. Simple enough. For a double bottom, the price makes 2 successive troughs at around the same level. After the second trough, the breaking of the neckline constitutes a completion of the pattern. And the same considerations for volume will apply as it applied with the triple tops and bottoms, as it applied with the head and shoulders patterns. Essentially, for a double top, as the second peak is made, volume should be declining. For a double bottom, as the second trough is made, volume should be declining. And for double bottom as well, as the price goes up through the neckline, the volume should be increasing. Alright, so again, we'll do exactly what we did for the triple tops and bottoms. We will look at, for each of them, we will look at a diagram to understand how it works, and we will also look at an example to see how it looks in practice. Double top diagram. This diagram here is a diagram of the double top. It's even simpler than the triple top. There's just one less peak, but we'll quickly go through it. So again, we have here our blue line, which is the neckline, right, which serves as our support level, which is eventually broken. And we have the price starting off on its usual uptrend from here, comes up, goes through the neckline point, and it makes its first peak up here. Right, this is the first top. Following that, the price then comes back down and bounces off the support line or the neckline before going back up to the second point here. This is the second top, and then it carries on downwards, and again this here becomes our important point. This is the breaking of the neckline. This also constitutes the completion of the double top pattern, and the price carries on its downtrend. Again, could see a return move if the price comes back up and goes back down. That will be fine. And you can see that the double top will in effect precede the triple top. So in a triple top, we'd have it here and it bounce off once more and go off. This is the triple top, right? In the double top, it just carries on down, right? So that's the difference between the two. Now let us go on to look at a real life example. Double top example. This chart, we saw it before, the same stock. This is the Dow Jones Industrial Average, the ETF of the Dow Jones. We saw it before, though this is for a slightly different range, slightly different time period across the graph. And what we're going to do here is identify a double top. So give yourself a chance to identify it first if you can, and I'll otherwise tell you now where it is. So the double top we'll be looking at is over here. in this area where I'm circling the red pointer. And we can see here we have the one top here and the one top here, and this here being our neckline. Alright, so what is happening to the price? Well, here the price is going up. It's in an uptrend. It carries on, makes the first peak here. That's the first top. Bounces down to the support line or the neckline here. Carries on back up, makes the second top here, and you can see that these are at roughly the same level. Then it goes down and then breaks through the neckline here, signifying a completion of the pattern. And then as you can see, it goes way down following that. So in this case, a double top, you can see, works as a very good predictor of a downward move. Now you can see why double tops may be so common. For example, we have a lot of, we may even have a double top here, close to it. We have almost like something like that here as well. So double tops are kind of common. They don't always predict downtrends, but they often do. And obviously we've identified one here. So that concludes double top. Let's now move on to the double bottom. Double bottom diagram. Now we have a diagram of the double bottom, and we should all be very familiar with how it works by now. It is a mirror image of the double top diagram. It also looks like the triple bottom diagram, except it has three bottoms. Sorry, let's start again. Double bottom diagram. What we have here is a diagram of the double bottom pattern, and we should be fairly familiar with how this works by now. It is just the mirror image of the double top diagram. It is also very similar to the triple bottom. It has two bottoms instead of three. That's the main difference, as we discussed. Let's quickly go through how this will work. So again, the price is this time on a downtrend coming down from here. Alright. Our blue line is our neckline, as usual. The price then first crosses the neckline, going down, and it makes its first bottom over here. Right, then comes back up, hits the neckline, which is the resistance level in this case. Following the hitting of the neckline, it then carries on downwards to make the second bottom, which is here. Okay, after it's made the second bottom, it goes back up, and here is where it breaks the neckline, breaks this resistance line, and it becomes an uptrend. So this signifies the completion of the pattern, a new uptrend. This now becomes the support line. As mentioned, we could see the return line, possibly, or we could see it carry on going upwards. But essentially, this is the double bottom, and this is what it looks like. And what we'll do now is look at an example. To our example now, and the chart I have here is now again of the rupee, which we had in the early part of the lecture. This is the Indian rupee against the dollar, and it starts from September 2008 and goes on until December, pretty much the end of 2008, maybe early Jan even. Right, so again, the double bottom should be easily identifiable here. It's right in the middle of the graph. So let's quickly look at it. So this area here, where I'm circling my pointer, is the double bottom that we're interested in. Right, so we have our one bottom is here, and one bottom is here. Our kind of neckline is like that. So here we have the price coming down. It's coming down pretty sharply. It makes its first bottom here. Then it goes up to the neckline here, which is the resistance level. Then it comes down here, and then it goes on back up. Right, so it comes down here, makes the second bottom, then it over here breaks through its neckline, breaks through the resistance, This now becomes a support, and as you can see, it then goes on to do an upward movement. Right, so fairly straightforward how this works, kind of similar to what we've been seeing before. Right, so this concludes our discussion on double bottoms and double tops. We'll still got a couple more patterns to discuss. We'll be discussing saucers and spikes next, and after that we will come to our conclusion.